Hello, everyone, and welcome aboard. It is Sunday market review time, and I'm very pleased to join you from Tasmania, Australia. My name is Geoff. My surname is Pine. Hi, Helen. How are you doing? And it's good to have you on board for another week of Sunday market review. Of course, we do have a concurrent program running at the moment across all of technology, I guess, in an organised. What happened? I don't know what happened, Helen. In an organised event by Actions to Wealth, and therefore we probably do have a few missing participants this week in our show. However, there will be lots of talent on board and quite a few experts in their various forms, and I'll be joined very, very shortly by a couple of them. The first, of course, will be a look, as usual, at our macro view of markets around the world. And you've got to say that we've got a little bit of a change. As a result, well, I won't even say potentially. I was going to say potentially because of the Fed statement on Wednesday or overnight on Wednesday. And for most of us, overnight on Wednesday. And of course, that's shake, rattled, and rolled a few things. Interesting, and I'll bring Julian on board in a tick to have a look at those macro events. I guess that was the major one of them for the week. And the burning question now becomes, is that going to be a trend setter, or is it not? I guess, is this just a gut reaction to my mind? I've actually missed something, and as soon as Julian does come in, I'll ask him that question, because I've read the statement and I've read it 2 or 3 times. Maybe I'm missing a few pars out of that statement, because I only saw 5 pars in the statement, which indicated to me that nothing really had changed. However, I must have missed the press conference, which would have said, as I've read in the headlines, that instead of having a forecast, if you like, of no rate changes or no rate hikes until 2024, the Fed has stated, apparently, I have not seen that in the statement, and I haven't listened to the nice haircut, Julian. That's not coming from me, Jules, by the way. The statement did not say that, as far as I can tell. So either I'm missing pars out of the statement, or I'm missing something from the press conference afterwards. To eliminate us on all of those things and put my mind at rest, here's Jules. G'day, mate. How you doing?
Hey Geoff, how are you doing?
Yeah, look, I'm fine. A little bit chilly here in Tassie tonight. I've got the fire raging. So other than
Wow.
that, look, everything's great. Apart from COVID things going on in Australia, as you are fully aware, and tornadoes going through Auckland. What the bloody hell's going on?
Yeah, mate. Obviously, it's the fourth horse of the apocalypse must be just about warming up, putting its bridle on and its saddle, and starting to think about who is going to be riding it down this high street. So maybe it's this dude Powell who runs the Fed. So look, you're not wrong. Actually, one of the challenges we had around the Fed was we were always talking about them possibly talking about doing some tapering.
Yep.
Within the Fed, I think they did actually admit that they were talking about it. So there clearly have been some change, and they changed the famous dot plots. So they changed their forecast for a little bit higher inflation, a little bit more growth. And I think that's what spooked the market. So the algorithms are designed to catch things like that, and they'll see, oh, dot plots have changed. Now, hang on a second. What's a dot plot? A dot plot is a forecast, right? It's a forecast of what the world should be doing. But as we well know, the economic forecasts have had such a good record the last 18 months of being able to guess what the world's going to look like, that I think even Powell probably said himself, come on, guys, let's take this with a bit of a pinch of salt. But no, the market didn't. So really, if you include the 5 basis points of tweak they did on the reverse repo, which is a technical plumbing issue to do with the US Treasury market, which got nothing really to do with any change in interest rates, it was purely a technical thing, then really what happened is it was this change in attitude that people began to see, and then the markets all sold off. And literally it was a complete chaos, right? From the get-go, from that meeting, the market sold off. It didn't get any comfort from Powell in the press conference. And coming on the back of, I think, a extreme amount of over positioning, both in equities and in commodities and in the US dollar short. Pretty much an extreme amount of positioning everywhere. We hit correlation of 1, right? So all markets went down, including gold, including the commodity markets. Oil didn't. Oil's the standout winner. It didn't move that much, neither did dollar yen, which is definitely a sign of flight to quality. But what really was the key driver for me, Geoff, was the yield curve movement in the States. Now, for those of you who don't know about the yield curve, there's interest rates from 1 year out to 30 years in the US, and they're followed really closely. When the back end, that 5s to 30 starts to shuffle around, that's when I get interested. Okay, and what happened is that curve should always have a degree, should always have a degree of steepness. No, there, I can't do, there.
I always struggle with that too.
Got to do it on telly, right? It should always have a degree of steepness pointing upwards like that, right? Because after all, if you lend money, if you lend money to somebody for 5 minutes, what interest rate will you expect rather than when you lend money to somebody for 50 years? It's going to be a little bit different. So you'd expect to have a little bit higher interest rate for that 50 years. Anyway, so look, here's the key point. Okay, the shape of that curve flattened, especially from the 5-year. Now, why is that a worry? It's a worry because when you look at that, that's a sign that maybe the bond market told the Fed, it told all the algos who decided to buy the US dollar and sell everything else, that maybe the world isn't quite as strong as it was. So what I see and what's really interesting for me is that yield curve flattening, because for those of you that don't know, a yield curve flattening move is a sign of a moving from an economy that's doing really, really well to an economy that's starting to slow down. So we've got a bit of a countervailing thing going on here. But if the economy was starting to slow down, then that would mean the economy would be starting to slow down everywhere, and you wouldn't need commodities, you wouldn't need gold, you wouldn't need anything but US dollars. So this is maybe all part of the same thing. So here's the key thing for me regarding all of this, right? It doesn't matter what I think. It doesn't matter what you think, Geoff, either. What really matters is what the hell happened. Our job as traders is to look at what's happened and try and make some money out of it. We're not here to sit down there and pontificate about the world. That's what somebody called an analyst does. They get on CNBC and they look nice and wear a tie and have a haircut that looks amazing. Whereas us traders, on the other hand, have terrible haircuts, are unshaven. But what our job is to try and trade the price action, and that's what's going on. Okay, so we saw the sell-off. You've got to get on board with it. Now, the question is, what next? Because within this sell-off, what's going to happen? Where does gold get to? Oh, my God, gold was liquidated, right? Everybody's now long, still got horrible positions above 1,800 if they haven't stopped themselves out. So if we bounce a little, in all likelihood, there'll probably be more sellers. This isn't over yet. We've probably got to give this something called time, which is our great problem. So equity markets, this is a seasonally bad time for equities for the next couple of weeks or so into the end of the year. So we've got 5 or 6 days to go at that negative equity movement. So I think equities are going to struggle for the rest of the week. I think gold may struggle for the rest of the week. God knows what's going to happen to the US dollar. I'm not actually clear about what's going to happen to the US dollar. That's the equity market, right? Now look at that. Okay, shaken but not stirred, right, is how I'm going to put that. Okay, so I don't think that this is a big move. I tell you, when I start to get worried is when we take out those lows we put in place in May, right? What price is that? Can we see roughly what those May lows were?
40.57.
So I know from the record that's about 5% down, guys. So listen, right, in that area, about 5% down, what have we actually done? We've just hit the bottom of the trading range. This is still not bearish, so this is something we've got to bear in mind. The monthly chart in gold looks a bit crappy. The yearly chart in gold is not a problem. It's still a bit boring. You go and look at some of the other charts around the world and see what you think, right? This is where things get interesting. We've had such an amazing year. That's the monthly chart of gold. I don't even need to look at what that is. I know that chart off by heart, right? We're still sort of doing okay, but as I was saying to some of the listeners, I think a few days ago, this is really important, right? We shouldn't have broken down to where we are now. That's crazy. I think you've got to think that maybe gold's more of a trading range than it is a trend at the moment. But in order to break that trend and go higher now, we've got to take out, unbelievably, the high of this month, That's like 1920 or 1910, something like that, to get back on the bullish train again. Until then, the market's best case neutral, worst case, we're maybe struggling with a greater decline. Maybe this is the time when we go down to that $1,500 mark. Who knows? So look, nobody quite knows what's going on. We've got to see what unfolds over the next 2 or 3 days. Key numbers for me are the PCE number and actually anybody from the Fed saying something reasonable. Like, yeah, guys, look, we changed the dot plots, but you're getting obsessed with this when it doesn't really matter because we've got no idea what's going on either. I don't think they're going to put it like that. They maybe make it slightly more flowery language, but that's still the key thing, right? This was a one side of the boat trade where everybody had the same positions and the amount of speculative interest in the commodities was insane. So we're unwinding some of that, probably more to go. That's going to take a couple of weeks. Wait till either volatility settles or you get down to some key support areas to think about taking a contrary position. Right now, it looks like we're in the camp of looking for, if it bounces, we'll probably keep selling it until we get some kind of higher low, which is going to clearly take some time to develop. That's it for me.
Cheers, mate. I think that's very interesting. And the big question on everyone's lips, of course, who's, I guess, either part-time traders right through to professional traders, is this sustainable? And you've covered that fairly well. I have to therefore go away from that point to why do we have tornadoes in Auckland?
Well, actually, interestingly, now this is really interesting. If you really want to get into this, the weather in the southern hemisphere right now is fascinating. Okay, because I was looking at it the other day from a climate perspective. You might be a bit chilly in Tasmania, but historically you're not chilly enough. Okay, Geoff, this is the interesting thing.
True.
Okay, in Auckland, right? Seriously, in Auckland today, guys, it was 18 degrees and it's the middle of winter. What's going on? Okay, it's been hot for 2 weeks. Okay, the weather's completely screwed up. Well, what's happening is actually none of the bad systems can break out of the Antarctic. There's a little, if you like, a band of high pressure sitting around, keeping it all in there, keeping all that cold air in there. Nothing can get loose at the moment. So the roaring 40s aren't really roaring that much at the moment. So here's the interesting thing. When that starts to change, we're going to get a crazy winter. I suspect it's going to be short, sharp, and horrid. So Geoff, dig out the snow chains, dig out your snowshoes. You might need it in 2 or 3 weeks' time when things change a little bit, and maybe some of those systems that haven't been able to get up to you start to hit Tasmania and the South Island of Auckland. And I think everything else is random, is crazy shit, and it's amazing. God, isn't the weather fantastic?
But you're absolutely right, and I was just thinking today, we've lit the fire a few times, but it's really not that necessary. As you say, if it's 18 degrees in Auckland, okay, it's probably, I don't know, about 13 here, I suppose, was the maximum. It leads me to the next question, which you know a little bit about, and that is, how does that affect the power market?
Very volatile at the moment because the weather systems aren't normal, so it's not raining as much. For those who don't know, New Zealand needs a lot of rain because 85% of our power comes from renewable energy, which is wind and hydro. So when you have settled conditions, it's not very windy, and when you have settled conditions, it doesn't rain that much. Listen, Yvonne hasn't even taken the pot plants off the fire, Geoff. All right. Off the stove. So I for the time being, it's still autumn here. Long may it continue. Hopefully we can breeze straight through winter without noticing, and it's just going to it'll stay lovely weather until things pick up again in September. I suspect otherwise. There will be no ski season anywhere if that was the case. So we're due our turn, but for the time being, we're getting lucky and we're getting away with it, and long may it continue.
Yeah, we know it will come. We know it's coming, but as you say, it might be short, sharp, and SH1TTYE. We'll see. Mate, thanks so much as always. And it's a little bit sad about the conditions in Australia at the moment, but I'm sure that'll change at some stage and we'll resume normal transition when the time is right.
We will do. And
have a great rest of Sunday, mate.
Thank you, Geoff. Thank you, everybody. Thank you, everybody, for listening.
Okie dokie. There's the big picture, and the big picture to my mind is just a little bit on the what happens next side. And I can see in the questions box that everybody's thinking pretty much the same thing. Let's switch our attention from where we would normally go right now is to the fundamental side of things, which I guess in many respects is not a long way from where we were just now, talking about not tornadoes and not the weather, but what happened over the last few days in the States in particular, of course. And I would have thought Alexis would have been focusing a little bit on that as well. But we do have, as I said at the head of the show, we do have an event happening at the moment where most of our presenters are tied up. And for that reason, we are not going to see Alexis in the show tonight. And potentially we're not going to see a few of the others as well, as they are tied up. But somebody that we do have in the show, and of course is on the tip of everybody's tongue at the moment, thinking, oh my God, has crypto's died? Is this the end of the crypto world? Is Bitcoin going to zero? To answer all of those questions, well, and a few more, I'm sure he's in here with me at the moment, and he's not ducking for cover at all. G'day, Shukri, how you doing, mate?
I'm doing good. Yeah, it's not going anywhere.
Well, it's not going down, it's not going up. But
it's just,
is this the beginning of something, or are we just having a little bit?
Yeah,
of a
let's look at the charts. I mean, don't look at the immediate pattern, because you will go crazy. Let me show you what happened. Yeah, like Jules said, right? When Powell spoke, okay, he's probably more powerful than Elon now. Good to know that. Good to know that. There's somebody more powerful.
Wow, is that possible?
That is possible. Look at that. Look at what happened after the Fed. Look at that. Look what happened after the bond yields. So after the dots, after the dots. So again, it is stuck in this vicious range here, right? So again, hopefully this will form a higher low, but don't look at this. If you want to go into crypto, you have to look more deeper and look at the longer term pattern. So again, you have to remember that 2021 is 1 year after the Bitcoin halving of 2019. Let's look at the past two Bitcoin halvings, 2013, first Bitcoin halving in 2012. Look at that. It went down also, and then it went up towards the end of the year. Okay, so this is, okay, it seems to be following that pattern, although this was very, very extreme. This freaked a lot of people out. And I think a lot of people missed this. Now, this is what happened in 2017. Look at that, same thing. Going down and then going straight up. So the thing is, does it freak people out? And of course, you know, Geoff, you guys got a bank. You know what a bank run is like, Geoff? I never experienced one. But crypto, there was a bank run on Friday. The world's first large-scale crypto bank run. I don't know why they did this. This was on reserve system, and the peg with the US dollar broke, and the crypto went down from $64 to 74 cents. Well, went down to zero. So that's what's happening here. So, you know, looking at this chart is very frustrating. Looking at this chart looks good, but don't be convinced by all of this, because this is the future. We must ask ourselves, hey, what's going to happen in the future? Is there going to be a DeFi summer? You know, which is about pools. Is that really going to happen? Well, I'll show you. So I showed this in the free wallet show. I said I went to this IDO. It's on DeFi. I haven't seen this in a long time, Geoff. This is my account. It went up 10 times. So I'm cool. My 500 became 5,127 in this Powell and in this bank run thing. So I'm good about that. Now,
okay, hang on. Wait. So you were shorting Bitcoin? Is that what you're saying?
No, I was buying this. This is a DeFi coin. This is a new one called Formation.
Oh, sorry, I didn't realize what chart you're on. Okay.
Yeah, this one. Yeah, see that? So this is a new one. So, you know, the new listings are still doing well, which is relative, okay? Because some say, no, that's not doing well. We had 100 times last time. Okay, we had 100 times, but now we're only seeing a gain of 1-2 times, or even going below the offering price. But this one went 10 times. So I see.
Actually, can I just again intervene? I'm sorry for intervening, but just to understand, more so for me than anybody who's listening. I'm being completely and absolutely selfish here.
Yeah.
You've always said to me, since we crossed paths, I don't know how long ago, it seems like 100 years, but you always said to me, if Bitcoin is crashing or the major coin is crashing, the altcoins are the place to be. Is this the case? Still the case?
Okay, there are pockets. It's not broad-based. This is why, Geoff,
selective.
in a bear market is just not fun. I'd rather not be there because you have to find the diamonds in the rough. I found them, but it takes hard work. If this were like a permanent thing, I wouldn't want to do it. But yeah.
Okay, so what you're really saying is if you aren't into your space, then you're probably better off just not playing in that space.
Well, you won't find it. I guarantee you won't find it. It is very, very difficult to find. Now, this is 10 times. Now, okay, I think relative to crypto person, they said only 10 times, but that's fine. So if this were 2-3 months ago, I think this would go 100 times, 50,000, so you could buy a house. But guys, now at least you can rent a house. So, we're in the transition phase from renting the house to buying a house. That's how I put it. That's how I look at it. So are there things?
Did you say 150,000?
Yeah.
Where do you buy houses for that? Malaysia.
Malaysia, yeah. If this were a good time, this would go to $50,000. And now it's like $5,000. So in $5,000, which is 20,000, yeah, you would get a good place in Malaysia, but you rent. You have to rent.
What's a good? If you said if this was a good time, what's a good time?
If this, a good
now I'm
time,
putting the pressure. Now I'm putting the pressure on. When's the next good time?
The next good time, I think, is in July and August, because what we need to do, again, what we need to see is Bitcoin going up and recovering, and then Bitcoin just not going anywhere, because that is what would bring people to the market. That's why for now, you still look at pretty much Bitcoin, and I would like it to see somewhere here, and then just really not going anywhere much, or just go up high and then not going anywhere much. This is the pattern of last year. So this was good, right? This was good. See, look at this, Geoff. This was when the alts were moving, see? Because Bitcoin was going like, okay, within that. So we need that. It needs to move up, and then it needs not to go anywhere, because I know crypto is weird. See, Bitcoin is like the super goal of crypto. If Bitcoin keeps on going up, people would just put money into Bitcoin. Just like that.
Well, we've seen that, haven't we? Through the stimulus packages.
I know, Geoff. Look at your experience, right? For you to go in a polka dot leading coin like Kusama, it was very difficult. You see, even if you wanted to do it, it was very difficult. People would have said, "I'm not going to bother. I'm just going to go into Bitcoin. Never mind. Who cares?" Fair.
Look, it was really easy just to stake the rest of these. It only took me about 8 hours to do it. My godfathers.
Correct.
This is not for 65-year-olds.
It will come, but that's the fact. People will just want to go Bitcoin, so we just have to wait until Bitcoin breaks out of this range and not go up so fast. Okay, I'm sure a lot of people want me to say, I want it to go up so fast. No, you don't want that. You really don't want that. You want it to go and just go nowhere like this. This is good. We need something like this again.
Yeah, look, that's no different to anything at the end of the day. If you're investing it, unless, of course, you've just invested in it. Of course, you want it to skyrocket, but it's not healthy at the end of the day. It won't give you long-term returns.
No.
Mate, thank you so much. We will see you, of course, through the week in all of the shows that you participate in, including your own, which is on Monday and Wednesday at, I'm not sure of the times now. You've changed a bit, haven't you?
Congratulations, how Geoff did it.
Yeah, Tuesday we'll investigate that. That'll be very, very interesting. Thanks, buddy. We'll catch up with you through the week. All right, from cryptos into the wonderful world of commodities-based trading. And the first of them we're going to look at is that shiny stuff, that shiny gold stuff that only Ainslie can smile about at the moment. Apparently. She's got a smile on her face.
I do.
How's it going,
actually.
mate?
Oh, it's going well. We've had a very busy weekend, but we're doing really well. So, gold. I know we talked about a retracement, but let's have a look at share the screen. Let's share the screen.
Have you got charts? Yep, good.
Yeah, I do.
Cool.
That, and let me just pop you over here. Okie dokes. We talked about retracement, didn't we?
Yeah, a hell of a retracement.
We had a lovely little bull trap there, and down we came. First off the first cab off the rank was obviously the Fed Reserve that was talking about increasing interest rates in 2023. But hey, let's just not overreact, guys. But we did. So down she came. That was very painful. But the other interesting thing is on a seasonal chart, the last 2 weeks of June do have a bit of a pullback on gold. So we were waiting for a retracement. It was bigger than we thought. I didn't think it would go quite down this far, but hello, here we are at 1763, or just under 1764. And yeah, look, it's just reacted to the strength in the US dollar. That's the way it's going to go. It's not something I wanted to see quite so severe, but hey, look, that's the market does as the market does. Hey, Geoff, it's just, you go with what it is.
What's your take on it, eh? Is this a gut reaction? Is it something that we had to have?
Well, we were expecting retracement because we'd had this, look at this weekly chart here. We'd had this solid move up after we'd had a double bottom, a bounce off this level here. This is weekly support, by the way, on this. Sorry, not weekly, monthly support on my weekly chart. Long week, very long weekend working actually. So excuse me for tripping over, but we had this double bounce, had a lower high, and then we took off, and then we went long, and so we've had this major push up for the last couple of weeks. We expected a retracement. I'm not even sure what kind of. I haven't put my teeth back in, Fibonacci retracement level on to see where this has come back down to. But it seems to be
kind of a waterfall, though, isn't it, rather than a retracement, don't you think? Well, part of one. We don't know if it's now sustainable or not. That's the question, isn't it?
Well, that's the question, isn't it? If it stopped up around here, I would have said, yeah, okay, that's the pullback we were expecting to have sort of at this level. But it just reacted, really threw up, didn't it? It just went, oh, bleh, and just kept going and going and going. The seasonal charts, and I said this last week, one of the things I'm looking for on this chart and coming into it, so I'm just going to hang tight for the next week or so, is first week of July, I should see it bottom out, and I'm looking for that July-August rally. That's what's coming down though. That's what's hurtling down the on the pipelines. This is what I've researched, and this is what the seasonals are telling me for my bias. I've just got to wait to see how far this keeps going in the next. It could go sideways. We all know that when gold goes up, all goes down. It has a bit of a chew for, several. We've had it for several months on one occasion where it just went sideways, and then or just a really slow drift down. But then we've got we've had this strong move up, but got this move down, bigger than we thought. And I think there was a lot more of an overreaction to something that's being talked about. Interest rates weren't being talked about being increased next year or this year. It's 2023. Yeah, we're talking.
I didn't even see that. Where is that?
2023.
I heard this.
Yeah, it's in the.
Yeah, but I've seen this in the headlines, but I haven't read it in the statement. I didn't see the press conference. So where was that?
I heard it. It was. I'm going to say I saw it on the bleary-eyed at 4 a.m. in the 4:30 in the morning. It was a shocking night, I've got to tell you, because I had to get my daughter up into netball training at 6:30 up at the school. So this is at 4:30, and I did see it bleeping across saying interest rates are being considered 2023, and I just sort of, in my half awake stupor, I just sort of went, oh, well, that shouldn't matter too much. They're talking about something coming down the line in 24 months' time. Huh?
Yeah,
No.
me too.
Oh, yeah.
I've completely missed something.
Yeah, I missed something. And then, you know, by the time you actually are on your third cup of coffee and you're going, what the hell just happened there? That's what happened. What can I say?
Yeah,
so
it's a mystery to me, but I mean, as Jules said earlier, like the market was primed to go in the opposite direction for a period. What that period is, of course, is the question on everyone's mind right now.
And it could have been the catalyst. It might have been the straw that broke the camel's back. So the other thing was, and I've shared this with you guys on Trading Buddies on Wednesday, was the Larry Williams seasonal on Monday on the S&P. Yep. Now the S&P has already, let me just pop over to that. You can see that okay. S&P did a really nice cascade, and Ash warned that, you know, we're talking about the last trading day of June having a 95% success rate of being a short.
Which is tomorrow, right?
It's tomorrow. But having a look at the S&P, obviously, and as Jules has said, everything's looking top heavy and looking to come back down. So the S&P might have got a bit of a head start on that, just on that seasonal. So you think? But yeah,
just a little bit. It makes it really tough to trade that, doesn't it?
It does, actually. Interesting on both the daily and weekly. You can see this has just come down nicely. And what you've got now on a weekly, look what you've got on a weekly. You've got a double top, very neat on that weekly chart. So how much further and how much stronger, what's left in the tank on Monday? And this is the juxtaposition of the situation, is that we've got this seasonal bias at 95% accuracy on Monday, on being the 8th last trading day of June. And we've also got Monday being the third trading Monday of the month, which is our fabulous go long on the third. So guys, just be careful tomorrow. That's all I can say. Just be really careful how that's going to impact gold. You know, here we come back again, the highly correlated gold S&P. When the S&P goes down, gold should go up. Don't even think about it. That correlation's broken down, as you can see. They're riding in tandem, these two, gold and the S&P.
Yeah, I think there's a few correlations. Just had a bit of a hissy fit over the last few days, frankly.
Absolutely thrown out the window. So yeah, that at the moment, the S&P, I just wanted to share that seasonal one that's coming up tomorrow, which is really important. And the gold has just thrown up all over the place. And I really have nothing here further to discuss and to see what will happen, whether we consolidate neatly for the next week or so, or whether we're going to just keep drifting, or whether it's going to be, I don't know, maybe an Ash trade down here at 1550. Not sure we're going to get there, but who knows? Who knows at the moment? Everything's a bit like that at the moment. We'll just have to wait and see.
Yeah, well, look, I think we'll probably learn a little bit more over the next couple of days, whether that move is actually a gut reaction. But I don't know that it is, and I kind of get where Julian's coming from with everything was overbought or oversold anyway. It had to correct, and it just needed the slightest hint to instigate that. And I totally get that. Whether that now becomes a trend, of course, is entirely up to the gods of trading, I suppose, at the moment. Now, whilst you're here,
yes.
And thank you so much for cutting out of the IFP and coming in to give us your much valued opinion on gold and now the S&P. Let's focus our attention on something that didn't really crash too much, and maybe the black stuff.
Yeah, the black stuff. Now, here's an interesting scenario because
I actually can't see your chart on oil. I think I've got.
what are you looking at?
I've still got gold. I think.
Are you serious?
I can't actually see what that is. That chart. Yeah, I've still got gold.
Does it say US oil up the top? New share. Let's do a new share.
There you go.
There we go. US oil. Did it react? Did it get upset? No, it didn't get upset. It had a little bit of a what you doing to me. And that's only because, again, it was called a bit of an overreaction to what was deemed the price of, the US Fed Reserve putting its interest rates up. But anyway, we all went through that, and I think.
But they didn't, and they haven't.
They haven't. They were talking about it. They were talking, and this is the thing.
But
about
they weren't. Where were they?
Okay.
I want somebody to paste into the chat box where the Fed actually said that they're going to raise, or they intimated that they're going to. Yeah, anything like that in 2023.
I'm going to make a note of this, Geoff, because I've got a lot, but I'll find it.
Apart from a press clip, don't send me a press clip. I want to see where the Fed actually said that.
Okay, I'll see if I can find it.
Simon, you're on my side. I think I have not seen this anywhere.
Yeah, I all I got was press clips, but I've got to say, when I was 4:30 in the morning, I was only relying on press clips because I wasn't doing a full in-depth study on it. I don't know what's wrong with me.
No,
I need to get up my game at 4:30 in the morning.
Yeah, come on, get real. I wish I'd got out of bloody bed at 4:30 in the morning because I had the as you know, you saw on Wednesday the euro dollar breakout trade.
Yes, that was
and
a good
of course
one
I
for
did not a bad one, eh?
Oh, thank you very much. Tell your mother.
No problem.
But it's just this oil. Oil is, there's a couple of things happening here, but the sentiment is generally she's looking a bit safe. Now, interesting around the traps and the Senate, I sort of like visit a few, stalk a couple of the websites with sentiment and what oil traders are thinking and direction and all the rest of it. Most of them now, all of a sudden, and we discussed this again the other night when we were just saying, well, when it was at 30, they were saying, oh, 50 would be good. When it was at 50, 70 will be good. Most of them are saying now they believe oil will remain above $70 a barrel. Good guess when it's closed at 71.41. It's a really
you
safe
get that
bet.
a lot. Yeah.
But moving ahead, there's a couple of things. They are looking at $100 a barrel by the end of the year. Now, a couple of things on that. One is that there has been a restriction in the amount of drilling. Amount of drilling affects the amount of capital being invested. Vice versa, amount of capital being invested in oil for whatever reason, new drilling and new projects, has restricted the supply. This supply is going to continue down the line. The we discussed the other night, the QE pipeline has come to a screaming halt. So that's the one that will be taking oil from Canada down to Houston for processing and refining, and that's been stopped. So again, there's a few other elements out there, and there's a few things that are coming down the track that are really going to impact the supply of oil. We've been talking predominantly about the demand and how some economies are slowly coming back online, and there are more airlines coming back with lifting of restrictions and the pandemic seemingly a bit of I guess you could call it, not necessarily people are over the pandemic, it's just that people are, economies or governments have to open or are desperate to open, or learning to live with what we've got as more vaccinations move out. So there is two elements now. One, there is a few supply issues coming along, and we've spoken also about OPEC really keeping a choke chain hold on what is going on. And that's understandable because they blew it up last year, didn't they? So OPEC, drilling, new projects, capital expenditure also affecting supply. major pipeline pulled. That's the supply side. The demand side is as it increases. So this is where they're saying, well, supply issues, demand issues. Demand is going to increase, supply is going to reduce. This is where they're coming up with, they expect to see $100 a barrel. Seasonal bias until about October, November is for this rally to continue.
A little bit of headwind there, but it gets through that, then yeah.
Yep. So whether we're going, when you look at the chart, your headwind on your monthly, look at this, straight across, $75 a barrel, yep. Right? So it gets to 75. I would imagine we have a bit of a sideways move until we get back up into this level again. So you can see it. I've got to say, this is about the time that Julian taught me how to trade oil. I was just thinking, this is easy. You just get a short oil. It's just going down. That was good. I really thought it was an easy commodity to trade when I first started trading it, because that was about it. That was about when Julian first introduced me to oil. And I'm hoping likewise we'll have a nice little run up to $100 over the next couple of months as well, as we see it. That was a seasonal bias, but when we get to 75, guys, I would imagine that we're going to have a bit of a pullback there. The other thing, we've just broken the 200 on the monthly. Oh, okay, that's interesting. Because yeah, it will break through and it will tend to retest the 200 on a monthly, like that. See that congestion for several months? Yeah, that spaghetti is choking on the 200 moving average. So yes, I would imagine 75 might be a bit of a top out, and then we might see it consolidate before we take off to 100. So there we go. That's
by the dips.
Okay.
By the dips.
By the
dips.
Muted. By the dips. No, sorry, I just didn't hear you. I'm a bit shattered after 3 days.
Ainsley,
full tilt.
Go and have a Pinot.
Oh, gee, I've got to feed the kids. Yeah, okay, I better go. I'll catch you later.
Thank you so much. Much appreciated.
See you later.
Okie dokie. There you go. There's Ainsley telling us all about gold and oil and her domestic situation with her children. And that's fantastic. And I'm sure I've got absolute confidence that she will have a Pinot with the dinner preparation. No question. Helen, thank you so much for posting that quote from FX News. Wow. Wonder how much they get to determine where the market moves. FX News. Cheers for that. They're not the Fed, and that was my whole point. If the Fed said that, then I'm okay. But if FX News says that, I'm not really convinced that we've got the reaction that we deserve, frankly. But you know, I'm not a fundamentalist. I'm not an economist. I just look at charts. It's pretty much as simple as that. So I'm really not in a position to say that what the Fed did or didn't say is pursuant to what's going to happen in the markets. I'm not qualified to do that. So please treat this as it is. It's simply a matter of my opinion. And my opinion is WTF, frankly. Okay, hopefully I've shared my chart and you can now see a chart known as EuroCAD. And the reason I want to show you EuroCAD is because there was a massive move on Thursday and Friday, as you would expect, given the Fed said something. I'm not sure they said exactly what the market reacted to, but that's my point of view. What didn't happen, in my humble opinion, was there are a couple of pairs that actually didn't break ranges. There are a whole stack of pairs that did. But in my opinion, there were 2 pairs that didn't break ranges. This is one of them, EuroCAD. Now, you might think, okay, opens and close here and a big breakout on that. I see that just a little bit differently, because I can also see this horizontal level running through here that is very, very clear to me. If I look at the daily chart on EuroCAD, I see that we are still in that range. And that really does interest me, because if I combine that with my thought process that says the market overreacted to this news, then I can see, and especially Ainslie's analysis on oil just now, in that, okay, if we go into $100, we're going to $100, but if we go into $79 or $80, then this make more sense than just the chart. To my mind, although it is a massive and big engulfing bar, it's only reached this level, which is significant to my mind. So I won't be looking to trade this long tomorrow or Tuesday or even Wednesday. What I will be looking to do, or looking to find, is something that tells me this is about to go back where it belongs, and that is down here to the bottom of the range. So EuroCAD, to my mind, okay, it's not a buy, it's not a sell right now, but if it comes off this high, it comes off this double top even on a 4-hour chart and gives me a lower high, then I'll be more than willing to trade that short down to and back into this range. And don't forget, we've been in this range now since the 10th of May. Actually, I thought it was more than that. 1, 2, 3, 4, 5, 6 weeks. It's enough to tell me that that range is strong. And for that reason, I will definitely be looking for this to come back into the range and trade it short. Now, if it breaks these highs, so if it goes again, comes back and retests them, then I've got a reason to change my thought process. But at this very moment, I don't have a reason to change my thought process. Same with pound Swissy. Now, pound Swissy on the weekly chart has delivered a big reversal on the previous 2 bars, yes. But again, if you go back to the daily chart, look at the range. The range is very, very clear. And it's been, this one's even longer, right? We've been in this range since, let's go to here, April, the 12th of April. So all of these highs, these failed breakouts, if you like, may be repeating themselves. So to my mind, again, pound Swissy is going to be not a buy just yet, but potentially a sell. Now, I can see maybe some of you are thinking, yeah, that's true. I get that. And I can't find an argument against it right now, except to say that there's a little hint of I guess a slingshot scenario, but we won't go there because that's a different ball game. We won't go into my personal strategy, but to my mind, this is a strong level to bounce off, and I'll be looking for a lower high in here somewhere. That's a daily chart. 4-hour will maybe give it to us a little bit earlier, but I'll be looking for a lower high in this vicinity to trade pound Swissy short. Now let's get to those that did reverse. Now, a lot of pairs did reverse on Wednesday and Thursday and Friday, or Thursday and Friday for most of us. But there were only 2, interestingly, there were only 2 key reversals, in my humble opinion. And, 3, pound yen, euro Swissy, and Swissy yen. Interestingly, the Swissy is involved in 2 of those, and pound yen the other. And if you look at yen Swissy, you're thinking, okay, risk on, risk off currencies. These are clearly risk off currencies, the Swissy and the yen. Yet the yen absolutely overpowered, if you like, the Swissy as a result of that. Well, potentially as a result of what the Fed said. But this one here is interesting but not compelling. And the reason it's not compelling is I really don't have anything to tell me that this was coming in terms of, okay, we're ready to go short and short and short and short. And what I mean by that is, where's the double top? Where's the bearish engulfing bar? Where's the head and shoulders? Where's all of those signs that I look for before I look to trade this in the opposite direction? And they're simply not there. Not even on the daily chart, any chart you go back to. This was clearly just a reaction of the market to an announcement that to my mind was false, but we won't go there again, right? But Thursday and Friday bars are extremely bearish, without question. They have, however, stopped at a significant support level. So I believe that tomorrow, south is not the way to go. But don't just jump in here and say, okay, scalp. I'm not a scalper, but gee whiz, I reckon this is a reasonable option to go to trade this long until you get a lower high, which is not there yet. So that's one of them. Euro Swissy is the other. Massive bullish engulfing bar on the weekly chart and a key reversal bar. Now, as you can probably see by this chart, I was fortunate enough to actually catch this. I'm kind of the opinion that this has got more to go than does the previous chart that we just looked at, pound yen. So I'd be looking for anything to buy here, any retracement on this big move, bullish engulfing bar. It's also a key reversal bar. If we got go back to the daily chart, it's probably more clear. If we come back and retest that level right there, I think that's an excellent buying opportunity. And I don't think I'd stop buying this for a while. I think this has got a fair way to go till we reach these highs around about 111. So we've got a good, strong move, in my opinion, available to us here, taking profit at these levels. The last one I'm looking at is Swissy yen. I just mentioned it. Hell, is that a reversal bar or is it not? It's a key reversal bar on the weekly chart, and completely untradeable as far as I'm concerned. But it does point, it really does point to what's about to happen next. Interesting when you look at, and gee, I wish we could get rid of this 2015 bar. Would be really, really nice, because it would make the chart a whole lot easier to read. I can't trade that, but I think it's a definite pointer to what may happen next. I'd be extremely surprised if we don't get an inside bar in the coming week. So it's next week, and I'm pointing towards next week. This time next week, if I look at this chart and we've got an inside bar sitting here, I would trade the inside bar and I would trade it short. But I'm not suggesting that you trade it short right now. I'm not suggesting you trade it long right now. I'd wait for that inside bar to occur, and then I think we're in a very, very good chance to trade this short, which indicates, or which the key reversal bar does indicate. Wow. Okay, we've completely blown the show to pieces in terms of its normal structure. But as I said before, that's very much because there's an event going on, and most of our traders are involved in that at the moment. But we hope you've gleaned something from the show, and you can take it away and hopefully during the coming week make some money from it. If not, just take it on board and use it at your discretion. Thank you very much to Shukri, Ainslie and Julian for coming in and sharing their expertise as always. Helen, thank you so much for you and your comments. I'm sorry I can't answer them all. It's not that format of show. And of course, thank you to Simon as well, anyone who contributed in the chat box. And Lionel, thank you very much indeed for being part of the show as well. We'll look forward to 100,000 shows, well, almost that, throughout the week. And if you're not aware of what they are, Actions to Wealth on all the social channels will tell you what we're doing throughout the week, and we look forward to seeing you through some of those. Have a wonderful week. Hope it's profitable for you, and we look forward to catching up at the same time next Sunday. Bye-bye.